Now, after laying off almost 25% of its workforce of 150 people, BNPL startup Simpl founder Nitya Sharma tells CNBC-TV18 it was a hard decision letting go of those 150 people because the company had overestimated growth prospects. In a chat with CNBC-TV18's Aishwarya Anand, he spoke about the reason for the layoffs, the path to profitability, plans to join ONDC, and a lot more. Here's a slice of that exclusive chat.
You've actually, Simpl has joined the growing list of startups that has laid off its employees, and from what we can understand, you've let go of close to 150 employees. I hope that number is correct. So I want to understand from you what was the reason behind it, and can we expect more layoffs this year going forward?
Yeah, we, as you said, unfortunately, I had to take a very hard decision to say goodbye to so many talented people who worked with us, helped us get to where we are now. One thing that we realized as we were planning for the next year was that what we expected will happen in e-commerce in the short term, which is the growth of e-commerce in the next year or two, was definitely an optimistic assessment we had when we were planning for growth the next couple of years. As we stood this year, we felt that we needed to operationally become a lot more efficient so that we are able to focus on the most important customer priorities. One of the things in e-commerce is there's just so much to do, so much room to cover. And, the macroeconomic environment last year was very different and sort of allowed us to think that we should probably hire a lot more people and work on many things parallelly. What we realized as we were thinking about this year was what we need to do is focus a lot more on the most important customer priorities. And so what we did was a difficult decision to reduce the headcount so that we can focus a little bit more and be slightly operationally efficient.
Okay, now talking on performance, take us through how does your FY23 numbers look like? Where does your revenue stand? And are you profitable yet?
No, we are not.
You're not?
Yeah.
Okay. Could you shed some light on some of the numbers?
Yeah, there are a few numbers that we talk about. We work with about 25,000 online retailers. We have about 5.5 million active users. Our revenues are, in mid double digits, $1 million per annum. We are not looking at profitability in the next couple of years, but our business is such that we have a lot of levers that if we want, in 2-3 years, we can be profitable. Right now, we are focusing on efficient growth. We're definitely focusing on investing in growing the customer base, merchant base, and investing in technology.
So the last you raised funds was $40 million that you raised in 2021. So how are you positioned when it comes to capital efficiency, and do you plan on raising more funds in the near future?
Yeah, our business is relatively capital efficient. We are, unlike a traditional payment company, we focus on merchants. Our customer is retailers, and what we describe ourselves as a merchant-first payment network. So that's what we do. What that enables us to do is run a very efficient business. So we do not have traditional burns that so many companies have around customer acquisition as much as traditionally that is thought of in payments. So it's a fairly efficient business. Currently, we're not planning to raise money. We are focusing on making sure that we are investing our resources very efficiently right now. We also believe this market is not a market to raise capital.
Now, could you also shed some light on some of the plans that you have in place for 2023, and are partnerships with bank also on the cards?
Yeah, so in 2023, as I said, we are making our platform more available to connect to other businesses and enablers out there. We have had multiple conversations with banks. We are talking to banks on, providing more type of solutions to customers on checkout. We are expecting to double at least the network of merchants. So as I said, we are close to 25,000 merchants right now. This should become north of 50,000 merchants by the end of this year.
What
And
kind
with-
of